Hello everyone, this is Paul from the PN Academy, and in this video I'm going to be talking about how you can trade false breakouts. Now in the previous videos, in one of the previous videos we spoke about how you can avoid false breakouts, but now in this particular one we're going to be speaking about how can you utilize the opportunity to trade the false breakouts. You can actually trade them, and it's very easy to spot a trade opportunity using them. So if you've been facing a problem or you're still finding it difficult to avoid the false breakouts, you can actually trade the false breakouts, right? So before we get started with what we're going to be covering in the video, please help support this channel by giving us a thumbs up, or in case you've not subscribed, let's subscribe so that we can take our numbers higher, so that many people can come across the content that we do produce, right? So what are we going to be covering in this video? We're going to be speaking about, we have to first understand what a false breakout is. After that, then we're going to be looking at what makes up this false breakout, right? You have to understand all this. Then we're also going to be looking at how do you actually trade them? What do you have to look out for to be able to trade the false breakout? The rules are very simple. If you've been following the channel, you know how we operate. We start with theory, we go into details, then we get to the charts. That's one. And then also two, you know that we do our price action. Whatever we're putting out on this channel is what we use. That's why we don't advertise maybe for classes or what. Yes, we do teach, but it's out of someone's will. So whatever we're putting here, in case you're very serious, it's exactly what we do use to trade, right? So going forward, let's first define what a false breakout is. Now, simply a false breakout is when the price breaks a level. It can be a resistance or support, or it can be an order block, whatever method you're trading. But as long as a supply level or demand level has been broken, supply and demand levels are the same as support and resistance. It's the same thing. Supply is a resistance, demand is support level, right? So when a support or resistance level is broken and the market fails to continue in that direction, or what we simply term as the price failing to respect the rules of break and retest, right? What do I mean by this? What I mean is, you know, I'm just going to attach the break and retest video in the top right corner in the cards there, so that after watching this video, you can, if you've not watched it or you don't understand the rules, you go and check out that video so that you can understand them. Now, if this is, let's say, my resistance and price comes and breaks, we said the first rule is this break here, the act of the price crossing. Then we need a weak retest. We need a weak retest. And we said when the market is retesting this, in most cases, it is creating a pattern, so that if this retest is weak, then we can continue. When there's a change of trend here, you can take your trade. This is what makes up a break, a proper break and retest. Now, when these rules are not fulfilled, that's what we mean by a false breakout. For example, when the market breaks up with a strong momentum, and again breaks back down with a strong momentum, this is what we are terming as a false breakout. I hope now it makes sense to you, right? So this is what it looks like, right? Let's just look at it on this image here. The price came down, right? It turned from here. Now, when price turns from here, remember, I've always mentioned, I think in every video that we have put across or we have put on our channel, that turning points are very important. If you understand the importance of turning points, trading is just going to be fun for you. Now, this turning point is giving us a support level, or what you guys call demand level. So it was rejected and pushed up, right? Then it means that this turning point, when price comes back to it, what do we expect? We expect again price to react to it, or to even reject the price up. Now, well, we've also been speaking about momentum, but I think we just have to make a whole video about momentum so that you can understand momentum. I want you guys to look at this aggression up, this impulsive move up. This shows that the momentum of buyers is too strong upwards, right? Yes, here someone can say sellers were, this was a big sell momentum, strength, but look at how it lost momentum, then buyers took over. Then look at the momentum when the candle was using to approach down. Then suddenly it gave a big candle. This is what you people call manipulation, though I don't want to call it like that, because I believe that's a normal market condition. Are we together? The same happens in the real life. You will go to the market, you'll find someone selling the same product. There are two sellers. You'll find one seller, they both have the same product, but you'll find one seller maybe added value to that particular product and then increase the price, or they're the same products, but because of the difference in locations, maybe the difference in distance, So you'll find the prices are different. I usually don't prefer calling it a manipulation. Yes, it's manipulation in the market language, but I usually take it as a normal thing that will happen in any market situation, because like I've given the example, it happens in real life. Same products being sold different prices because of certain factors. Now, this is what we call a false breakout. And usually the market makers use it to get what we call liquidity. Now, without liquidity, the market cannot move. Or why is it liquidity and why won't the market move? It's because they're trading with bigger money than us. So for them to be able to make profits or to close their orders so that the price can move, or the direction of the price can change. For example, if they're going down, for them to change to go up, or if they're going up, for them to change to go down, they have to close positions. And where is this money coming from? The money is coming from people who are losing. And who are the people who are losing? It's the retail traders. Majority of retail traders lose money, right? So this turning point here push the market up. Now, when the market reaches here, we expect to push up. Now, here, this is where most people are caught up, right? People over-refine. People want to refine to the smallest order blocks. Those who are using order blocks. Or people want sniper entries who don't wait for change of trend. They will just be taking trades at this slab. These are the people market makers like. So they will just issue out this big candle you think is it's a breakout. You don't even wait for the rules, right? Remember we said if the rules of break and retest are not fulfilled, that becomes a breakout. And what are the rules? We said we need a break, a weak retest. Now, if you look at this market situation here, the market broke down and then issued an inside bar. This is a clear inside bar and broke back above this level here. Now, for you to be able to take a sell on this trade, you need it again to break back downwards. And then on the retest is when you can take the trade, which didn't happen. So it broke up, the momentum wasn't good, came back, retested, and the market issued out a candlestick pattern, which is a morning star, right? So those who use candlestick patterns, I'm not one of them. Those who use candlestick patterns, you can clearly see that the market issued out a bullish momentum move, right? So this is what we call a false breakout. I hope you guys have understood it fully, right? So now let's continue. Now let's look at what makes up a false breakout, right? Now, if the market breaks with, if the break is impulsive or the break is with momentum, that is a tick, right? If this is the area, let's say this is your support, the market comes and breaks with momentum, that is a tick. But now the issue comes in when also the retest is the strong momentum and forces a break again. This mark this statement here. If the break is strong with a strong momentum, and also the retest is strong with the momentum and breaks back and causes another break, breaks back inside. This is another break we're talking about. This is what is forming a false breakout. This is what makes a false breakout. Now, this will take us to the next thing we're going to talk about. But before we go there, let me just explain it using the same diagram that we looked at, this very diagram. Now, we are saying that we need a break, which is okay. Now, this would have been a breakout, right? But the problem came in when, again, the market broke back inside with this inside bullish bar, right? It means that, again, the market has to struggle to break down so that we can continue with the sell. But you can clearly see this level held it and then pushed it back up. This is the importance of turning point. So these are the two things that make a false breakout. The impulsive break, which is a tick. It also applies to the normal market break. Then the second one is the moment the retest has a strong momentum. Do not panic. Do not start taking trades, because most of you are trading without rules. But now we are giving you rules through especially this video here in case you want to trade the false breakout. Just to mark this turning point here and let the market, if it is to sell, let it break back below again, and then on the retest, that's when you take your trade. In case it does not, change your bias. The rule is telling you that we're not going down. The market is failing to break back below. So why should you be looking for a sell? Even if there is a structure here, let it. That's why you see we had a lot of dodges here. Let this structure push the market again below, then you can take the trade. Right, so this is what makes up a false breakout. I hope it makes sense to you. In case it does not, you can comment below. We look through almost each and every comment, because it was through your comments that we do understand what you guys are struggling with, so that we come up with content as long as it aligns with our rules and it's what we trade, because we don't want to put anything on our channel that we do not use to profit in the market, right? So hope now we understand what makes up a false breakout. Now let's look at how do you trade these false breakouts. We spoke that we're going to be looking at how we actually trade them. Now, let me just put there first all the words. Now, the break is going to first happen. You need the break. Then when a strong retest happens and causes another break, this is what we said comprises of the false breakout. Now, what would you be interested in? You're going to be interested in this area here. What do I mean? I mean that if the market comes and issues this support here, pushes it up, then when the market comes and breaks down, and then again breaks up, this is what we're saying, causing another break. Another break is breaking back up. You're now interested in this level here that you marked. When the market approaches this level, you just look for change of trend. If it gives you a change of trend, then you can take your trade. The same can happen the other way around. Let's assume it is a sell, right? Let's assume it is a sell. For example, here, we had a turning point here, so you just mark this point. The market broke up, then again broke back down. So you're just interested in the market coming back to this level here, and then you can take a sell. Right together. Just look at this. It's the same principle. The same principle. We have a turning point in this area here. We have a turning point. Actually, it could have looked like a neckline over W. Instead, what happened? This is a strong momentum up, but the market broke down. So for you, you would be waiting for the market to come back and retest this area here, and then you take a sell. But with a change of trend, of course. I've been showing you guys change of trend in almost all the latest videos that we have uploaded on the channel. Look at those examples and you'll understand what change of trend is. But of course, we're also going to dedicate a few videos to particular change of trend, because one of the major reasons why we retailers lose money and why we are making the majority of the 95% is because we're just trading with candlestick patterns, which are not enough, right? So you look for change of trend in this area, then you take your trade downwards. Are we together? Now, this has been theory, though today we are going to use MT5 and we're going to be using our examples on what we call Volatility 75. Now, in case you do not know what Volatility 75 is, this is a synthetic index. It's actually one of the favorite securities I like trading. It's found on only one broker. I'm going to leave the link in the description. In case you don't have an account, make sure you guys get an account or demo. Practice. Apply all these rules that we're looking at, because what we're teaching you, you can trade anything. You can be able to trade cryptos, stocks, the forex market, commodities, and all those other markets. Apply the same principles. Now, the advantage with this synthetics is you can trade even over the weekend. For example, I'm making this particular video on the weekend and the markets are moving. So let me just open my volatility chart so that we can look at this particular rule that we have been speaking about. How can you benefit from false breakouts? Okay, so this is my MetaTrader 5. Of course, we use MetaTrader 5 to trade synthetics. So I'm going to use the weekly time frame because that's the analysis time frame I use. Why? Because I am a swinger. Remember, just in our latest video, which I'm going to put in the card in the top right corner, we spoke about swinging. Now, I'm a swinger, meaning that I get my structures from weekly. So I won't be using that. In case you're an intraday, you can use daily. It's okay. If you're a scalper, it's okay. If you're using the method of H1 that we showed you guys in the other video of how to do intraday and scalp, it's also fine. The principle is the same. It applies to whatever time frame you've chosen. Though it's good to follow the basics of the proper time frame to use, right? Because it will avoid you from making a lot of mistakes that will cost you your capital. Now, I would like us to look at V75. Here, the market was making higher high, higher low, higher high, higher low, higher high, higher low, higher high. Now, why am I just skipping this part? Because the market was making normal market movements. Why? It was making highs while retesting. See? It was making these highs while retesting. It was making this high while retesting, right? So these are normal market situations whereby the market is just making higher highs and retesting them. Also here, the market came and made a high, this high here. Now, the issue came here when the market created this high. This is exactly what we're speaking about today. The market created a higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? Let's count this as one swing high, right? Then it came and consolidated here, but it has not changed trend. As long as it doesn't take out this level, it has not changed any trend. We are still bullish. Now, the issue came here. This is what we're speaking about. The market showed you momentum. Small candle, bigger candle, big candle, plus a doji, and then broke back inside. Now, look at this, guys. The market broke above. Now, most people were trapped here. when the market broke above, most people started buying. The people don't wait for the rules of breakout to happen. Instead, they're forgetting that there's a possibility of also a false breakout to happen. And indeed, it's what happened. The market again broke back inside, broke above, broke back inside. Now, what are the rules that we're saying? We're saying that if the market breaks above and then breaks back inside, you just don't panic. This is a turning point that you've used to mark your level, which was the previous higher high. What do you want? You just want the market to come back and retest this area so that you can go into your smaller time frame to look for a trade. Now, if you go to a smaller time frame, you clearly see that they are entry rules. For example, I'm a swing. I use H4. So let me just switch to my H4 time frame, and then we can see the rules that we did observe here. Let me just move in front. Okay. So are you seeing when the market broke back down, it had created already a head and shoulders here in H4, right? This is a head and shoulders. And you know, after head and shoulders is created, what do you want? What do you want to see? You want to see a retest here. We have a video on head and shoulders. So this is this was the false breakout that we're seeing in big time frame, our structure time frame. So when you break down below, we have to come back and retest this area. This is our area of interest. So you would catch this move downwards, right? So this is how you trade false breakouts. You want to always, do not panic. Let it make the false breakout, break back below. Just wait for it to come back into that area that it was supposed to test and then continue up, or then it has broken. Now it has created a second break and you want it to come back and test it so that you can go down with it, right? Now, this is the first example. Let's continue with it. Let's go back to weekly. So you can clearly see when the market, now, this is what is interesting here. People tend to forget history, and that's why most of you are losing money on V75, volatility 75, because you want to do analysis in smaller time frames. Now, if you're to extend this high here that gave us this false breakout, you will clearly see that it has history almost repeated itself. Let me just show you something here where the current market is, right? I want you guys to observe here, the same thing has happened again, but people do not understand. The market came and reacted to this level. Why? Because it's a previous historical turning point. The price was rejected here. Price was rejected here. Okay, didn't touch properly, but it is historical because you've seen where we've gotten it from. Again, price came and reacted here. Now, what happened? Market lost momentum, then suddenly it broke down. Now, do you know how many people were trapped here? Now, I want you guys to observe this. The market broke back up with this engulfing. Then what happened? It retested here. Now, in our second last video, I'm just going to, you can check in our second last video about how to spot breakouts, right? I asked you guys questions and some of you answered that. Is there a retest in this case here? Yes, there's a retest. So if you want to see this retest here, you go to your next lower time frame, which is daily. You will clearly see that this market had a retest. Are you seeing this? The market broke back above and was retesting this area. Now, most people thought now the market has met a resistance, so it's going to continue down because we had a breakout, right? What happened? The market has been buying ever since. If you do not understand some of these rules and you cannot be able to use them as conferences together with the methods of trading you're doing, you're always going to lose money. And these synthetics are really, really very volatile. So in case you do not understand how structure really operates, you're going to lose a lot of money, right? So I just hope you're going to implement this that I'm showing you guys and you'll use it to your advantage, right? So let's go back to weekly and we'll identify another example. So we can look at this example also here. We have this, the market came and created this high here and price broke above, came, retested it and created a lower high. Now, when the price broke this price down, what happened? Your interest, when the price broke down, your interest, you're just waiting for it, right? So this is acting like this M is on a false breakout. You're not interested in the noise that will happen here. You're interested in it coming back to this level that it broke. So it created a false breakout on, right? So you want to take your trade from here, and you'll clearly see that there's a change of trend here to take your trade downwards, right? The same thing happened here, right? Let me just show you here. The same thing happened here. The market created this turning point. Are you seeing here? What happened? It gave us a false breakout. It broke out, then again broke back in. Now, I want you to look at this tail here. The market came and tested here. If you want to see that the market tested, always go to the next lower time frame, which in this case is daily. So when you come to daily, you'll clearly observe that the market, let me just move it here. You clearly see that the market broke above, creating this false breakout here, broke down again, and then you wait for it just here. This is exactly the turning point that we observed that side. So you wait for it here, go to your entry time frame, and look for a trade. You can clearly see you will not you will not have to see a lot of drawdown before you go to, into profits, right? So previously we spoke about how you can avoid false breakouts. Now, if you're still facing problem of failing to spot how you can avoid the false breakouts, you can now trade them. Actually, you can use them to your advantage and trade them. Personally, I love trading the false breakouts. I don't like avoiding them because I understand what structure is. Now, with what we have been sharing with you guys on the channel, I really expect you guys also to be good with it, right? So that was it for today's video. In case you want to get a demo account, start practicing synthetics, they operate 24/7. Make sure you get a demo account. Do not open a live account. Get a demo account, and I'll pass this promo, of course. APN Academy is an agent of Deriv, payment agent. We're not affiliated to them, but we are payment agents, right? We help you transact so you can deposit and withdraw through us, especially those who are in Uganda, right? Very fast and it's instant, right? Instead of waiting for days and having bad rates, we do help you transact instantly with good rates, just at a small cost, right? So I'm going to leave a link in the description in case you want to trade with Deriv. It operates 24/7. You can trade even over the weekend. It's really good. But first, get a demo account. Get a demo account. Actually, we shall not deposit for you in case you're new and you just want to start trading immediately. These instruments are really very, very, very volatile. So just check the description and get yourself a demo account. Practice, practice, practice. These things do pay very good money once you understand them, right? So that is it for this video. If it really gave you value, give us a thumbs up. Support the channel. And also, if it was the first time coming across this particular video, make sure you subscribe and turn on the notification bell. We do release such videos every week. Have a great day.